Economic growth can only come from innovation, new ideas if a country wishes to grow and compete with other large and emerging economies. And the increased number of new ideas also requires the need to protect them, making patent rights essential. Now, a patent is a collection of exclusive rights awarded for an invention, which could be for a product or a method that offers new way of doing something. Also, patents are termed to be the economic backbone of a country. Therefore, when it comes to a country's development, the terms economic growth and innovation go hand in hand. In this context, India's global patent share has increased in 2021. India's stake was 1.7%, almost twice as much as its 0.9% share from the previous year. Additionally, this is also higher than the UK's 0.6%. Now, while the increase is a positive development, India's volume of patent applications compared with other large economies is still low as seen on the chart. Now, a key reason for India's relatively low patent numbers is its low expenditure on research and development as a percentage of its GDP. Now, while the US spends 2.8%, China spends 2.1%, Korea spends 4.2% of its GDP in R&D, India only spends about 0.7% of GDP as per the latest data available for 2020. Now, other factors also include a lack of awareness about the benefits of patent protection, a lack of resources to file patent application, a lack of manpower to handle these applications, and also a lack of strong intellectual property rights law. In recent years, some steps have been taken to improve the patent system in India and encourage more patent filings, but there is still room for improvement in this area. After witnessing strong growth in November, life insurers reported moderation in new business premium growth in December. Now, in the insurance industry, the term new business premium often refers to the premium income that an insurance company receives from selling new policy. Now, it is the sum of the first year premium and single premium reflecting total premium received from the new businesses. Now, after a 30% uptick in November, the new businesses premium was reduced to 10%. However, when we look at the year-to-date fiscal year 23 growth, first year premiums grew by 31%. Now, while we see a moderation in December, this can be attributed to festive season spending that could have taken priority for customers. However, in the final quarter of a fiscal year, customers usually look to purchase insurance products in order to reduce their tax obligations. Also, the premium growth of life insurance companies is expected to remain healthy as fiscal year 23 would be the first full year free of any COVID-related restrictions. Now, over the long term, insurance demand is positively correlated with economic growth. The growth would be driven by a supportive regulatory landscape and a push to increase insurance coverage. So what does these news mean for you? While the initiatives have increased India's global share in patent filing, a lot more efforts are required to compete with large countries and promote innovation in the country. This will have an indirect neutral impact on you. The moderation in December's new business premium growth is more of a blip or a non-event in the insurance industry. Now, insurance is expected to remain healthy in fiscal year 23 as the last quarter of the fiscal will likely see an increase in demand for insurance products as customers look to reduce their tax obligations. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.